Good morning and welcome once again for the second session, today's second session. Today we have with us a very important topic, that is charitable trust, latest amendments and judicial pronouncements. From what I understand, there have been a lot of changes in the reporting of charitable trusts. And there have also been many important judicial pronouncements that we should be knowing of and taking care of in our work with the charitable trust henceforth. So to explain us in more detail, we have with us CA Vipin Batavia ji, who will be guiding us on the same. To introduce today's faculty formally, I would like to invite CA Mahesh Pagaria ji, who is a past convener and a core group member.
Riti ji, you are leaving or staying? Thank you. Thank you once again. Very good morning to all of you. I'm proud privilege to introduce our today's second speaker, CA Vipin Batavia ji. He has passed his chartered accountant in 1985 and practicing in the name of Vipin Batavia and Company. He is mainly practicing in the field of direct tax audit and achieved expertise on formation and taxation of charitable trusts and all related areas in the field of charitable trust, NGO, clubs and associations, for which this topic is there today's, the latest amendments in the Charitable Trust Act and judicial pronouncements. His professional achievements are, he was the president of Chamber of Tax Consultants in the year 2003-04. He is the office bearer of Chamber of Tax Consultant for more than 5 years. He is the chairman of various committee and was the chairman of General Committee of CTC for 3 years. He was actively involved in the various committees of BCAS and WIRC. He has achieved expertise in the field of charitable trust, having every matter pertaining to charitable trust, institutionals, including charity commissioner, income tax, FCRA and CSR matters. He has co-authored a book on the charitable trust under printing, published by Chamber of Tax Consultants, that will benefit all of us. He has given lectures at various professional bodies, trade associations, platforms, Mumbai, WIRC, charity commissioners on various charitable trust topics. He has written the article in the various professional magazines, newspaper and various particulars on charitable trust associations. He has represented before the standing committee for the changes in the DTC draft of charitable trust. In the real life, he is a proactive in charitable activities. So, ज़्यादा combination हो जाता है. His activities running his own trust. He is attached with various charitable organizations. He was National Secretary of All India organizations called Dharam Bharati Missions. So, a lot of credentials on his pocket. With this, I request all of you to please welcome him with loud applause. And request Seema Mehta ji and Bafna ji to please present a memento and flower bouquet, nahi, towel bouquet to him. मुंह में flower ही आ जाता है. Thank you very much. that you also will for charitable. Just please stand and we will welcome you.
Good morning, friends. First of all, I thank the JV Nagar CP Study Circle for inviting me this morning to share my views and express my opinion on certain issues pertaining to charitable trust. First of all, I will congratulate JV Nagar Study Circle. I think it is their silver jubilee year. And good. So I think they deserve a round of applause. There are many seniors in the profession are present here and fellow brothers, professional brothers, particularly Ravi Gupta. He is also having good practice on charitable trust, and he is also regularly speaks on the same topic. I am really happy that he is here to listen to me. That gives me a immense pleasure. Looking at the attendance, I think still the topic is not that hot, which is to be considered in recent days. Certainly, I advocate if you have only few trusts, looking at the amendments and looking at the government going towards to what they want to achieve and what doubts they have on charitable trust. There are certain black sheeps, there are certain experience government has faced from the activities of the charitable trust. They are bringing these amendments. So the chartered accountants are persons who are having very few, 1 or 2 or 4 or 5, whether under obligation or otherwise. I will advise them to leave those cases, because just for few cases, such a complicated topic, such a complicated issues, such a complicated and compliances. If you see in last 3 years, financial year 21 and budget 21, 22, and 23, circulars, notifications, 2 Supreme Court judgments have turned the whole 360-degree provisions of charitable trust and made it more complicated and made it more compliances and watertight provisions. If you miss a date, if you miss the time, if you do some minor mistakes, the trust faces a huge, big tax liability. So it is required to know all the provisions, and not only that, there are income tax, charity commissioner, ROC, then other laws are also applicable. So one has to be very careful while handling charity trust matters. Particularly in last week or so, 10 days before, Calcutta High Court has given a judgment wherein chartered accountants are being questioned and put that judgment. Signing reports, project reports and all that is really really it is a liability on the professional who are signing those documents, accounts, audit reports. And now audit report in Form 10B and 10BB. I think I have seen first time in my life that there's such a huge, so many detailed audit report is to be signed by the chartered accountant, and that too, CA has to certify it true and correct. In the beginning, when we issue a certificate, it was just only true and fair of balance sheet and income expenditure. Now there is one more part is added that we have to certify the annexure, means the details provided in the annexure, that is audit report, is true and correct. So if it is not correct for any reason, then we face the problem. And nowadays, if there is a huge issue or any problem, so we have to face even cases. They can sue us. So we have to be very careful. But I have said earlier also, and today also, with a proud that chartered accountants of our country are capable. Even we are capable of handling all this. Even I have said in the presence of Principal Chief Commissioner, who is in charge for the whole India charity trust matters. Okay, you are bringing those changes, but please mind it, we are capable. Our training, our experience are such, and our confidence is such that we can handle it. Only thing is, we feel, bad about, or we feel crushed about, certain things. Really, if one case is happened, there is amendment of the law for the whole, means fraternity of charitable trust. Donation from inter-trust donation, one trust to another trust. And one case was there, and because of that, this amendment has been done without thinking the unknown or unintended problems which has been created. We'll see this inter-charity trust donation is become very nasty. I will use this word. How can you donate to a hospital for a patient? How you will be paying to the school trust for education expenses? Then you will be allowed only 85%. So we'll see later on. And one more thing. Charity trust, the provisions is my favorite topic. I speak from my heart. And because when I see such things are happening, it hurts me. And it comes out when I speak. Coming to the topic proper. I have missed giving the name, Mr. N.K. Jain and Mr. Maheshwari as the coordinators, Purvi and Vijeta as a conveners. I think as it is known in Bombay Chartered Accountants Group, this study circle is very well known, famous. Even I tell you, speakers also feel proud that they are going to speak at the Jabinagar study center. So there are few study circles in Bombay. One is Matunga, then Churchgate, then one Borivali. So there are few where there is a interest. In membership enroll itself indicates more than 1,500 members are there. So itself indicates the activities what this study circle is carrying on. My congratulations to the whole management and the members. Now, I will be covering amendments mainly for financial year 22 and 23, because 21 is also there, but 2 years are passed, so people have already known to that, many speeches, they have already practically done it, the changes in the registration, the other changes in the amendments, which is already gone through. So I will be covering on that. One more thing I want to tell. This 2 hours will be too short for me or any speaker to speak so much of on charitable trust. Whatever best I will be able to cover, I will cover. Otherwise, my email ID is there at the end. Anybody can ask me any problem, any question. I will answer to that at my convenience. But certainly, I will attend to that. Finance Act 22. What they say is they have done rationalization of many provisions. To some extent, they are right as well. Alignment of two regimes. Now, what are two regimes? One is 100% deduction under section 10, that is 1023C, and section 11. So the trust get, I think the persons who are here, I believe they are all already know the basics of charitable trust provisions. So I will go for the changes. So the two regimes are 1023C, and that they wanted to align that. So whatever the conditions, whatever the requirements, whatever the forms are there under 11, the trusts were registered under 12A, now 12AB, then in between it was 12AA. So those are brought at par with the provisions for the 1023C trust. And there were anomalies. There were misconception were also there, like spending of 11 to accumulation. It was there for 5 years. In 11, the wordings were there, it was for 6 years. So they brought, after many years, they came to know about this mistake. Alignment of two regimes, all the provisions of 11 has been brought at par with the 1023C, providing clarity in taxation in cases of violation. See, violation were scattered at the many provisions. Under this section, under that section, under that, if this happened. So they have brought specified violations at one place, and they have brought specified income at one place. So there is a clarity. To that extent, there is a clarity. What violations if trust does, they have to pay tax at the rate of 30%. Specified income also, if it is there, then in that case, trust has to pay 30% on that. But there are further clarity. So in case where there is default in violation, certain specified violation, only tax will be levied on that income. Or that happening. Suppose you have invested 1 crore other than 11,500 votes. So earlier was there, some ITO was not granting the registration as well. The whole income was taxed. Some were granting only taxing that 1 crore and not allowing any other thing. Certain officers where income tax were they are doing, they are allowing the expenses and certain amount spent on the object of the trust. So now they have brought clarity in that it will be taxed only on that 1 crore. The whole trust will not face defeat in claiming 11. This exemption will be allowed to them. So, the violation of different provision, I said they brought together taxation of certain specified income, 30%, then registration to continue and taxing net income, 1310 and 1311 new sections are added where some income will be taxed, not the whole receipts. Expenses will be allowed. Amount spent on the object of the trust will be allowed. Their capital expenditure will not be allowed. Donation to other trusts will not be allowed. Depreciation, which is not allowable under 11.6, will also be not allowed. So there is a working like our alternate tax. So that working is to be done. But at least they have brought that they will get the deduction. Earlier there was no provision. The officer, jo marji mein hai, wo karte the. So now there is a clarity to that action. Then registration to be cancelled in cases of specified violation. Now those they have brought into cancellation provisions as well. So the area of cancellation means the conditions for cancellation has been widened. And that is very important. Because there is a section, exit tax, what we generally call it, 115 TD, where the 30% of the net worth of the trust will be charged tax on 30%. So if your registration is cancelled and 3 more conditions are added, we'll see later, then those provisions will be attracted. So that's very dangerous. If a trust is having immovable property, their market value minus liabilities. So there are schools, colleges, hospitals, big other trusts also having immovable properties. They cannot afford cancellation of their registration. They cannot afford other things, not renewal of registration, provisional registration, and those things are there. In 23, 3 more conditions are added. So the tax, 30% is to be paid on that. Whether you may have liquidity or not, they are not concerned. Now, 100 crore property is there, liability kiska, trust ka, how much liability? 1 or 2 crores, a big trust. So on 98 crores, you have to pay the tax of 30%. So their intention is that you have taken exemption and benefit out of the trust. We have given you the exemption, and now you are going out of our net. So you have to pay the tax and go. So that is very harsh. Now, exemption of the trust or institution is available under Income Tax Act under both the regimes. So, regime is 1023C first regime and 11 is second regime. So, wherever we talk, both the regime or first regime can be understood accordingly. Now, there is a provision amendment in provisions related to accumulation by 1023 trust. It's a part of that equilibrium what they have brought in. So, existing provision, what was there? For accumulation, 11.2 was there. You can accumulate for 5 years. Form 10 was required to be filed before the filing of due date, and the money is to be invested in 11.5 board. So these were the conditions already there. But these conditions were not there in 1023C. Even there was no any prescribed form to be, there was no form required to be filed. Only the trust has to keep their record, any amount which is accumulated more than 15%. That is to be spent in next 5 years. So that amendment was brought into 2002. But there was no prescribed form. There was no control. Even 143 assessment, they have not checked. So these are the things which they have brought in. Now, new form has been prescribed. Now there is a common form, Form 10 for both the regimes. So accordingly, you have to fill the form. And the due date is the same. Due date 139.1, whatever is there, is to be filed before that. And accumulation is to be utilized only for the purpose or objects for which that institution is established. Institute of Chartered. CR1. If we want to accumulate, we have to file that Form 10, and then it is to be used for educational purpose, hospital, the medical purpose, like whatever is the basic purpose. And investment is to be done under 11.5. And if you have made any violation in that, 11.3 will apply, 11.3A will apply, wherein it will fall under a specified income. And you have to pay the tax of 30%. So violation in this accumulation is also not to be done. It is to be taken very carefully. Utilization of accumulated fund to be spent in 5 years. In section 11, the wordings were such. The year preceding the year in which 5 years are getting over. So that was coming 6th year. And it was continued for many years. So now they have cut it down. It is brought to 5 years from 2023. So that if there is an equal, and certainly the accumulation is to be done for 5 years. So it is to be spent in 5 years. So there was a mistake of drafting error, it was there, but it was continued for many years. So that has been brought to 5 years. So now it is to be spent in 5 years. So in 1 year, the earlier accumulation was getting over on the 6th year, and then next was getting over as a 5th year. So in 1 year, in last year, it was required to be utilized both the accumulations. That was the only impact. And I think people has come out of that. And there is application of income to be allowed on payment basis. This is really with effect from AY 22-23. I don't know how they have got in their mind to brought such a amendment. Income is to be accounted for whatever system you are following. Whether cash system, then there is no problem. But most of the trusts are made following mercantile system of accounting. So income is to be calculated on mercantile basis, but the expenses or amount spent on the object of the trust means the application of income will be allowed only on payment basis. Whatever amount is actually paid will be allowed to you. Because I think I found only one reason. People were making huge provisions for payment of taxes. And we are not paying or clearing those provisions for years. So there is a reason for this. But that doesn't mean that you do not allow the real trust who are some March month payments, salary, other expenses, electric, property tax, whatever. So those, but we suggested, but I think it could not be taken care. Like 43B, TDS and payments, what we know, if it is paid before the due date of filing of return, it is to be allowed. So bring at par with that so that your purpose is also served and people also will not suffer with that. But unfortunately, that's not the case. Now only it will be allowed on the payment basis. When you prepare, this is my personal advice, you prepare on the normal way your income expenditure account. While computing, what are the provisions are there for current year? You add it back. And in the next year, it is paid in the current year. So in the next year, it will be allowed on payment basis. It is like, we were doing computation in the business sector for depreciation as per income tax and depreciation as per other provisions and add back. It was continue like that. So it will continue like that. But at least it has curbed passing the tax liability to other years. Earlier liability paid. If you have claimed earlier any liability as application of income will not be allowed as a deduction on the basis of payment. That will be in 1 or 2 years. Otherwise, that will be over. Cancellation of registration. As I said, cancellation has become very vast because I have given how the cancellation power is grown. 2004, CIT has given the power that on the circumstances where the activity of the trust are not genuine or activity are not carried out according to the objects of the trust. So there were only 2 reasons that power was given to the CIT exemption. On the basis of that, he can cancel the registrations. Of course, subject to giving an opportunity. Appeal provisions are also there. And next, in financial year 2014, they have added more conditions. The income does not provide benefit to general public, benefit for any particular religious community or caste, any income of the property applied for the benefit of specified persons, with interested person in normal talk. 13.3 provide those persons who are covered under 13.3. One nasty provision is also there. Donation more than 50,000 in the life of the trust. They are also become persons covered under 13.3, means interested person. Now that 50,000 limit was brought nearly 25 years back, and still that 50,000 is continued. So we have many times represented that either you delete this or make it at least 50 lakhs or at least 10 lakhs. Anyway, there are political reasons as well, I think. Then the funds are invested in prohibited modes other than 11.5. So these are another 4 conditions added along with 2. These are the additional. Now this becomes 6 conditions. Then thereafter, on 1/9/2019, one more condition was added, that is not complied with requirement of any other law which are material for the purpose of achieving the objects. I think I have found in many cases, and chartered accountants are under misconception that if you have not done compliance under any other law, this will cancellation provision may be attracted. But there is an explanation, means itself the provision says that those compliances which are material for the purpose of achieving object. Means the compliances of any other law. Any other law means any other law of our country. So there are so many law applicable to charitable trust. But if those compliances, which is not complied by a charitable trust, which are material for the purpose of achieving objectives. Now, for example, PF not deducted, ESIC, टेंडर नहीं निकाला, आपने कोई छोटा मोटा फॉल्ट किया, that is not affecting the purpose of achieving objects. Now, for example, if you want to run a primary school or start a school and you have not taken permission from BMC or education department to start that, that is material for the objective. Now, if you want to start a nursing home or any clinic for the poor, just started, one doctor is coming and giving that, and if that is the activity of the registered trust, and you have not taken permission from the required authority, it is BMC gives that license. And so in some cases, then you have to go to education department also for educational purpose. So if you have not taken that license or permission, then that is material for the purpose of achieving the objects. So it is, we have to see that it is not that all the objects are, all the laws with compliance. And there is another thing. Now, charity commissioner compliances. If a small compliances you have not done, that is not material. And those can be compounded, can be condoned. But for the purpose of cancellation and for the purpose of registration, there is a 2 distinct provision. For the purpose of registration, he has to see whether that compliances under any other law is there or not. That's it. But for the purpose of cancellation, he cannot take that plea or this ground for cancellation unless that compliances or non-compliance order, direction or decree is either not disputed or attained finality. Unless it has attained the finality, then only that ground can be taken for cancellation. Otherwise not. If you have filed the appeal, you are fighting that matter. Until then, he cannot take this ground for cancellation. Further, there is amendment. As for new section 12AB, now you know from 21 there is a new section has replaced 12AA and become 12AB, where the whole new registration has come. And there were many problems which they have cleared recently on 24th of May by issue circular. I will cover the circular. As such, everybody must be knowing that. But there are some issues. Yeah, please. Yes, this is the area which is dicey. If those trustees are appointed as per the procedure followed by the trust is a legal procedure. Means issuing a notice, attending the meeting, majority they pass the resolution, they have appointed that trustee and that trustee has given consent or started working as a trust, then legally he is a trustee. Only they are not on the record of charity. So one can say, or charity commissioner office can say, that the decision taken by the trustees who are not on our record, we will not accept that. It is under their provisions. But so far as the public is concerned, so far as the trust is concerned, so far as income tax is concerned, they are the trustees. And there are proofs as well. You give the trustee list every time. You inform to bank. You have, so if legally appointed, then there is not the material. Now a person is died. So that it's a natural phenomenon. Anybody. It is their requirement. Correct? Now we are on income tax. Income tax says if it is material for the achieving objects. If you are a legal trustee, legally appointed by the trust, so you are a proper trustee. Only thing is you have not intimated to the charity commissioner, and there are condonation provisions. If you have not filed at all, I think this is a big issue. I tell you, every 15 days I get a case, and for years they have not, and particularly the trust which is registered in the Societies Registration Act, because there are election provisions. Every 1 year, 2 years, 3 years, there is an election, and they are not bothered. You should intimate, you can intimate altogether. Under section 47 of the Maharashtra Public Trust Act, you can apply to charity commissioner for appointment of trustees. That can be regularized. All pending change report you can file and he will condone in the interest. Charity commissioner is regularity authority. Though it is quasi-judicial. Now strictly, earlier we used to appear and get the orders and the handle. Now they are not allowing. They are also become lakir ke fakir. Yeah, that's it. So now only advocates can handle that. See, you can ask any question in between. Yeah, please. Impact in what sense? Addition, deletion of trustees. There is, for income tax, there is no problem. Ravi will confirm. What do you say, Ravi? Income tax, there is no problem. See, those which are material for the purpose of achieving. Now you decide whether it is material for the purpose of achieving. Only intimation. There is condonation provision. But I will advise. In the beginning I said, easy. One may take this view. One more thing, it has come to my mind. For now, renewal and registration. Income tax department has started asking, submit the copies of change reports. So now it has become really, and one more thing, irrevocability clause. Now when your renewal comes, in I think it will be September 26th, correct? Number 6 months before. There this issue will come, and I'll advise all chartered accountants, check their trust cases, whether there is irrevocable clause or not there. Or you file all the change reports. You have still 3 years, 3.5 years, and get it done. Otherwise, you will feel cancellation. Once cancellation or a renewal is rejected, now 115 TD provisions will apply. Because that is also brought one more, these 3 more conditions are added. I'll just cover it here. You have not renewed your registration. You have not applied re-registration. Re-registration means existing trust, which has not, for which 30th September is given the now extended time. And that is the main reason. Even I have written in my article and talked to top authorities. 1 year before you say you re-registered your trust. Once we were allotted by the department perpetual registration. I said, okay, now you want to make it 5 years, we will apply and give you for 5 years. But after 1 year, you say the persons who have not applied, and it was voluntary, it was not compulsory. Whoever not applied, 115 TDA provisions will apply. That is totally unfair on the part of government. Either you give us the time for registration, so they give initially 25 days in the month of November. But that was insufficient. Because I get feedback from the income tax officers. Daily they get a problem for such dates. So now they have brought that. So there is one more condition. If provisional registration you have taken and not applied for regular registration, those cases also will fall under 115. So there are 3 more conditions they have added. So we have to be careful for applying. And this year they have extended it. Next year you have to follow that water right provision. 6 months before, they have written very clearly, at least 6 months before. You can apply 10 months before. So why to wait? So renewal applications should go in time. There is 10 AB form is there, that is here. 10. In Maharashtra Public Trust Act, there is section 51A, under which you can frame a scheme and change your trust deed. ROC section 8 company, you can change that. And ROC is not problem. Society is not that problem because there are clauses of dissolution. Section 12 and 13 of Society Registration Act clearly says you can dissolve with some conditions. So it is problem only to the trust other than section 8 company and societies. But there are 3 ways to register, you must be knowing. So the trust, though they are perpetual. Earlier what happened, Charity Commission say we will not accept these clauses. It is perpetual. Why we should allow irrevocable clause or dissolution clause? And the department was asking because there was a CNAG report that trusts are being granted without irrevocable clause for registration. So that became a dilemma. Then we organized a meeting between Charity Commissioner and CIT exemption. And come out with a solution. So Charity Commissioner agreed that those clauses we will accept if it is a requirement of the government. You are a state government law. Central government is asking for that. And what is wrong in that if it is mentioned in the trustee? So they agreed and that this is gone. And the income tax also agreed for on the basis of affidavit, they granted you the registration. But I have seen, after even giving that affidavit, people have not gone for those changes. So now the time has come, before this renewal time comes, you get it changed, your trust deed. And please file the change reports. Whatever the change reports are pending, don't wait for that. No. So there are winding up clauses. So, and there are you cannot wind up. 4 years back, in Charity Commission also, section 22, I believe, deregistration provisions have come. Now, deregistration means you obtain the registration, you can apply for deregistration, and they themselves say zero the balance sheet and come for deregistration. So, there is question of money left out and taken away by the trustees. And where the registration provision has been granted, these are the 3 conditions, which is now occurrence of one or more specified violation during any previous year. Now there are one more thing has been added. Be careful about that. and it is given under the correct clause of the section and given for the 5 years, then please you refer Circular 11 of 2022. They have, I think, DGIT, CPC, must have thought I am something. How can I grant the registration without looking at the papers and all that? There is now provisional registration provision. I will issue provisional registration to everybody. So the people who have applied till May, they all were issued provisional registration and 20 or 20, 18 or 20 conditions. And out of that, 4 conditions were beyond the law and provisions. So CBDT, we represented CBDT, we time and again wrote them because I am involved in our professional that. So we, for the trust, we go on representing. So there they have issued this circular and they have said it is to be treated as an order of registration, and all 4 conditions, all 4 types of registration, ATG, provisional, approval 1023, ATG to that, their conditions are revised. So they were given the fresh conditions, only limited, which was there earlier, and you have to follow that condition. So this is the information which I think in every lecture I get this question. This is rightly. And I'm suggesting that Circular 11 you keep in your every trust file. Even if it is given order of registration, but for conditions, you need those conditions. So it is readily available in the file. Now there are three points they have mentioned, 1023C and 12AB registration to withdraw that or to cancel that. One is occurrence of one or more specified violation in the previous year. So if there is a violation which is specified, we'll see later on what are the specified violation. One of the violation. Second is has received a reference from assessing officer under the second proviso of section 143(3) for any previous year. So now, assessing officer, when he comes to know that there is violation and this trust has violated and it requires consideration for cancellation, so he shall, the word is shall, not may. So he has to intimate to the CIT exemption that this violation is done by this trust and I propose to proceed for cancellation of registration. And it is up to the CIT whether to cancel or not, whether to that reference is to be accepted or reference is to be rejected, after giving opportunity to the trust. So this is another provision because the income tax officers, it was not reaching to the commissioner. So we have to be, that's another condition, we have to be careful about that. Such case has been selected in accordance with the risk management strategy. This is a new concept they have brought for all SSCs, even selection for scrutiny, even any other thing, wherever the provisions are not falling, they take it under the risk management strategy and select the case or whatever cancellation, whatever they want to do, they can do under that. So this is the hierarchy we are facing, and mainly on charitable trust. I feel there are some people sitting either in finance ministry or CBDT or their other department where the law has been framed bias against charitable. I don't know whether they want to kill the charity or whether I don't think. We know there are certain black sheep, there are certain cases where have misused for terrorism. All terrorist activities, most of them are funded to charitable trust. So they are making it because in national security, FCRA is there, but they are tightening up these provisions. So many plannings are going on. Now, trust to trust donation will come later. Now, what are the specified violations? The trust or institution has applied other than objects for which it is established. This was never. There are judgments wherein it is said that if it is not contained in charitable trust, but the activity is charitable in nature, then a trust can do it. Now, those judgments are gone. Now, Act says you have to apply the income or spend only for the objects which are mentioned in the charitable. So, if it doesn't contain that object, you cannot spend. And if you spend, then it becomes a specified violation. And you face 30% tax, you face cancellation provisions. So whenever you start new activity or whenever we are being asked, generally they don't ask. After doing, they come to us. That's a fact of the life. Because I am going to speak to so many trustees on next Sunday, where I am going to say, by any change or any new activity you do, please have one phone call consultation with your chartered or employee. Because if it is not there in your trust deed, you cannot do it. And if you have done, or if you are changing your trust deed for any other reason, say irrevocable clause. So simultaneously, these changes also can be done. It is advisable. So there, if you put a clause, any activity which is considered in charitable in nature, the trustees are authorized to do that. So this one common provision will cover everything. But old trust deeds are very, you will not find such things in there. The second violation is trust or institution has income from profit and gains from business. The trust can hold business undertaking as well as can do the business. Business undertaking means somebody has donated the whole business to the trust. So that trust can continue that business and take the surplus as an income of the trust and can utilize that fund for the charities. That is permitted 11.4 and 11.4a, where the trust can do charitable activity in the nature of business or any business wherein the income is utilized for charitable activity. There is an amendment from 2009 that to proviso to 215 that any activity for in the nature of business will not be considered as a charitable activity. But order case, Ahmedabad Development Authority case, I have after not 10 years. 10 or 12 years. So they have defined what is interpretation of those provisions. We'll see later if time permits. I'll just say, instead of looking at the nature of business, now it is to be seen from the angle of profit making. So there is a 360-degree change in the 215 proviso. If a trust doing any business wherein the profit is just reasonable markup above the cost. These are the words used. Markup is different and margin is different. Margin is on sale. Markup is on cost. So wherever the trusts are doing the business, they have to find out the cost and reasonable markup can be added. And if that is done by that, then proviso 215 will not attract it. It's a good provision, good judgment, one way. Now, there are certain trusts from that surplus, they are running so many activities. Now they will face the problem. And even Nobel Education Society case also says profitability more than unreasonable profit is there, then you will not get the exemption. So these two judgments have turned the whole thinking, and all other laws, all other big judgments, even past Supreme Court judgments also gone. Because new interpretation is come. And one more thing. उनको भी दिखता है ना judges को मुझे आप बताइए कौन सा स्कूल करोड़ों से कम प्रॉफिट कर रहा है? बहुत ही कम schools I have seen which are in deficit or making small profits. What fees they are charging, particularly international schools. You see the hospitals. Their results you see. Corona is exceptional. Otherwise also they are minting money. So it is, it has reached, it took so long to reach to the Supreme Court, and Supreme Court has said this is, no, where is charity? Indirectly. They cannot write in their order, but we can judge that. So the time has come that you have to see that there is no money making. The care is to be taken. Now, what is reasonable markup? The Supreme Court has not defined or not given the percentage or figure in their judgment in the word development. In short, Auda, it is called. In Ahmedabad, you will see the board Auda, arrow. There is Kerala High Court judgment, which says 10 to 15% is reasonable markup. So there is one High Court decision which says 10 to 15%. I believe up to 10%, if it is there, it is good amount markup. If it is around 15%, then it is to be maybe arguable. And more than 15 to 20, it's a dispute. And beyond 20, it will be gone. This is my thinking and calculation, looking at the various judgments and what is the things going on, because 20% in 215 itself says 20%, and many places surplus 20% have been in the act have been said. So court has considered that. And the next violation is the trust or institution has applied any part of the income from the property held by the trust for a private religious purposes. So if a trust is using its income for a private religious purposes, it's a specified violations. Then the trust or institution has applied any part of his income or for the benefit of any. For a particular religious caste, religious community or caste. But department is taking religious community or separately caste. So if you are doing anything for particular caste, they are saying, no, it is covered as a violation. But the right English is particular religious community or caste. So that particular religious word will also to be read for the caste. You cannot segregate it. So if there is a religious community or religious caste, if you are spending for that, because in South India, there are many families, there are many groups who are doing religious activities for their community, for their caste. So those will be a violation. And there is an exclusion. Exclusion is SC, BC, ST, or women and children. So in case, if it is for the purpose of women and children, if it is utilized, then it will not be attracted. But scheduled caste, scheduled tribe also exempted. Now, there are so many issues has come up with this judgment. Because many schools particularly, or hospitals, giving some portion for medical store, or some portion for spectacles, some portion given to the bank for the purpose of that income is considered that. But if it is, that income is reasonable to the total receipts, then it is not to be considered as a business. Because if you read the judgment as a whole, now it is not the profit making. So how there is no sale, there is no cost involved. How can you mark up And how can you arrive at the figure? So I think that will become non-operative. So it should not be considered as a business. Because Wadi, so many this marriage hall and Wadi and hall, they are having that rent income. So now the time has come that you have to have that cost separately, cost working. If the trust is having many activities and certain things are considered as a business, then you should have the working of cost and markup. If you are giving reasonable 10 rupees ki book, if you are distributing at 5 rupees, it is allowed now. Earlier, 215 says any fees or sales, even if you have charged single rupee, then the provision will happen. But now that is gone. You want to say something?
Yes. Suppose the trust is created a
It's a planning to be discussed in my cabin. Telling, just let me go. You have a business which you have developed and you want to sell it. So you want to earn what? Goodwill? Or assets? Value means in the form of goodwill or in the form of assets or in the form of why you will get money. Means there is a asset. It means there is a huge surplus. So now 215 will be attracted. Number one, you want to get out of it, you can. You have to do some procedure and there will be provisions for taxation. Capital gain will be there because goodwill also now it's a capital asset. And there are different amendments for taxing trademarks and goodwills and all those things. And otherwise, assets, then there will be capital gain. But capital gain, charitable trust is not to pay the tax if you have invested in another asset. So it can be solved, but it should be well planned. Yes, please.
When a trust is running, recovering,
ये कम करना बेटा. हाँ. बंधा बचाना. Yes, please.
recovering,
Please again, please.
trust is running any hostel facilities,
Yes.
giving the residential facilities to.
Students.
So they are recovering some amount of their estate, electricity and food. So
Now there is no business. Supreme Court has very clearly said.
thank you.
They have mentioned hostels. So they are out of clutches.
Thank you.
Yes. It was a news. All newspapers covered. All professional organizations have covered. It is, I think, 4 months, Ravi?
yes, sir.
No, 6 months. November mein hai na? So on one day, same judges, both the judgments are delivered. And the size of those judgments, one is 164 page, another is 80 or 85. It took weeks to understand what they want to say. Whatever, it's a total change. That is what it is called 360. Citation I can give you. Or even your time, Ahmedabad Urban Development case Supreme Court, and there is a New Noble Society. So both New Noble Society is on 1023C6. This is education. But now it is being percolated to medical and others as well. Now they are taking shade of that judgment. Madras Tribunal has applied for a medical. They have dismissed one appeal. So now the time has come, you have to be very good. They say, I'll just cover it. New Noble says, if the word used in the provision is solely for education. So there are judgment, antitrust, then Supreme Court has said earlier, many High Court has said, hey, if the main object or your main activity is education, then it is education. Primary object, predominant. If it is education, those judgments have applicable, and it was there, they were granting, we were getting approval 1023C and things were going on. But Supreme Court has now defined what is the meaning of solely for education. They say it should be 100% for education. The trust should not conduct any other charitable activity, not even medical. Only connected with education and students. And your trust deed should have 100% clauses for education only. Otherwise, you will not get 1023C 600% exemption. And one more thing they have, and that issue will come up within a year or so. I am expecting that. There were 2 points. This is one main, and second was whether a trust should get registered itself between the local law. So there, Andhra Pradesh, one endowment act, very old, was there. An officer has applied that you have not registered, so I will not allow you the exemption. So that matter went to, traveled for many years to Supreme Court. And Supreme Court has said, yes, you are required to register with your local law. So that second part of that judgment, second question before the Supreme Court, has not come in the limelight because of the main changes. Department, I'll say they are going to take this point in near future. So be careful. It is to be registered under the local law. Now the issue will come for Section 8 company. I foresee, because there is a Bombay High Court judgment in 73. Yeah, in that they have said Section 8 companies are required to register in Maharashtra Public Trust Act, thereby bypassing the local law, and they have to register themselves, then go to income tax. So that issue may come up in near future. Okay. So let us on. I think we are going very slow. Any activity being carried out by the trust or institution is not genuine or not being carried out in accordance with all or any conditions subject to which it was registered. Any condition which is in the registration, if you have not followed that, they may cancel it. The trust or institution has not complied with the requirement of any other law. We have discussed a lot on that. Time for passing, and the AO can send the reference. We have covered it. Within 6 months they have to pass, but within 6 months from the end of quarter in which the first notice is issued by CIT. This is a new concept they have brought in. By the end of the quarter in which notice is sent, now quarter they have not decided what is quarter. But it is generally known because in TDS and everything, Q1, Q2, Q3, Q4, we understand that. So within 6 months from the end of that quarter, means maximum 9 months they will get. So at least they believe the concept of 9 months. If the reference is sent and it is been cancelled, no order for making the assessment can be done unless it is passed by the order and proper opportunity is given to the SSC. Computation of income in case of denial of exemption, which I have covered, that is 1310 and 1311 are there. You have to compute if violation is done under 215. then in case of not getting the books of accounts audited, there are three conditions, means three situations under which you will be allowed as expenses and amount spent on the object of the trust. Whole trust will not face the denial of exemption. Earlier, the provision was there. If any of the violation is there, they will not allow the exemption and tax the whole receipts. So now the expenses will be allowed with certain conditions. And in case not getting the accounts audited, if 215 applies, and third is not file the return under 139(4)(a) within the time allowed 139(1) or 139(4). Because now there is an amendment in section 2023 provisions. Now the return can be filed belated as well. Now belated October ki jagah December. So they must have thought kya karna do because there was a demand. But you can file up to 31st December, but Form 9A, Form 10, and audit report are to be filed in time. Now it's become that circular from August to 31st October, due date for filing 139(1). So even if you are filing belated return, your form accumulation form 9A and 10 should be filed before 31st of October. See, audit report is ready in September. Your accumulation forms are ready in October. So what remains for filing the return? Kaun CA nahi file karega? Everybody will file. It is for some reason remain, or trustees are not coming, or there are many cases disputes are going. Bank account is seized. There is a fight between the trustees. Cases are going on in the court or in the Charity Commissioner office. Those cases have to face that. So there was a lack of clarity in computation of income, which I have said certain expenses will be allowed, capital expenditure will not be allowed, and corpus, there are further conditions. Expenditure, if it is not done out from the corpus as expenditure, not from the loans and borrowings, and claim of depreciation 11(6), the assets which is allowable depreciation will be allowed, and such expenditure is not in the form of contribution or donation to any other person. They have used the word any other person. If you have donated to any other person, that will not be allowed. But there is a relief. It's a welcome provision. Instead of 100% denial of exemption, at least you are getting amount spent on the establishment expenses and amount on the objects of the trust will be allowed as a deduction, and on the net income, tax liability will be there. Then you can fight for that. The provisions of course, PDS and 48(3) cash payments, and no expenditure allowed, any set off of earlier losses, and no deduction in respect of expenditure allowed or set off. Any loss shall be allowed in any other provision in the Act. So this is a welcome provision. At least people will not be hit so much. There will be some relief. Amount applied in violation shall be liable to be included in the total. So this is also a good provision. It has solved many litigation. There was a lot of litigation. Suppose you have invested money other than modes specified in 11(5). There are specified modes you trust can invest only in those. There was a question of investing in shares. The question of 11(5) will arise. Unless the government allows that, it will not be done. One more area, movable assets are not covered in 11(5). Only immovable property and investments. So there are certain still dark area, which I hope the government will come and clear that. You cannot buy an ambulance. If you are buying, it's a movable asset. You are not allowed 11(5). So there are genuine problems. Yes, if you have received donation. Ambulance, if you have a trust is received one ambulance as a donation, then what? You can, yes. then these issues are there now. You take the current year's income and accumulate. That income means market value. Institute says donation in kind is to be at the nominal value 1 rupee. So I think that concept institute should also change. I think now it is market value. It should be, there are case laws which says, yeah, if computer is donated, you just take the value. Or second hand, even you can get it valued and take that price. Anyhow, moreover, in case where the violation is 13(1)(c), 13(1)(d), and 13(3). So these violations liable for included only to that extent. Not the whole income. It's a good provision. No deduction in respect of any expenditure or allowance or set off of any loss shall be allowed. The same thing here. Now, what is specified income? Like a specified violation, now they have defined specified income. Now, income accumulated or set apart in excess of 15% of the amount where such accumulation is not allowed under any specific provision of the Act. This has created another problem recently. Now, question have been the discussion in our, the people who are practicing in charitable trust and that, because it says over and above 15%, which is not allowed to be accumulated. Now, even after accumulation earlier, if there is an income of 2 lakhs, which is below maximum marginal, so there was no tax nil, income 2 lakhs, and we were filing the return, and it was accepted, and everything was. Now, there is a doubt, and to some extent, I also agree for that. It says accumulation is not allowed under any specific provision of the Act. So, if it is considered, it is specified income, then 30% tax is to be paid. So this is still not clear. I think Ravi, you also apply, and I think recently is going to cover that also. You see, according to me, I think that is not the intention of the law. Means accumulation above 15%, which is permitted, 11(2) and clause 1 to explanation 1 to section 11(1), that is 9A, to be spent in the next year or amount received. There are 2 reasons. So that those you can claim. But after that, if some amount remains, there is a question whether it's a specified income or a normal income. Earlier, it was normal income. But with this or these wordings, it is indicating that it is specified. So there is risk of 30%. And my practice or in my life, be practical and act accordingly where litigation is reduced as minimum as possible. So from this year, if you are accumulating, see that little more is accumulated and make the income nil. And it's a matter of only 2.5 lakhs. Chota trust ठीक है, 6 lakh का accumulation करना है, then you just to accumulate for 8 lakhs. But if you are accumulating 50 lakhs or accumulation comes 1 crore, तो उसको 2.5 lakh का कोई, there is no material. So my suggestion in this matter is to accumulate to make the income 0, nil. Deemed income referred to in explanation 4 to 3rd proviso and 11(2) or 11(3) violation in condition of 11(2) or 11(1)(b. Means there are conditions of 11(2) accumulation. If you have violated any of the condition of that, not investment in 11(5), spending in the 5 years, to be spent for a specific purpose. If you have done violation in any of those, then that will become specified income. Any income which is not exempted under 1023C on account of violation of provisions of 3rd proviso or not excluded from the total income of the provision 13(1)(d). 13(1)(d) is for investment other than permitted mode. Then likewise 11C also there, unreasonable payments to persons covered under 13(3), relatives. That is the next part. And now there is a penal provision, which just after this slide, I think next we will cover that. That's very dangerous. So we have to be very careful about any income to the trustees, authors, or their relatives, their concerns, whatever is the detailed covered, the specified persons, with interested person, what we call in company. So those are to care is to be taken. And not only that, now audit report and maintenance of books of account, you have to maintain the record that it is reasonable. You have to report. Auditor has to give their certificate. Okay, it is reasonable. If rent is paid, there is a question for rent. If rent is paid beyond reasonableness, the market value is say 30,000 and you are paying 60,000. Auditor has to say. So now 10B is going to cover in details, but I'm not going into that detail. Thank you, Ravi, for saving my that time. I think next week or that's so. Any income which is not excluded from 11(1)(c). 11(1)(c) means spending outside India. If you have not taken permission or government has not allowed you in general or specific permission, so you are not. So that amount becomes your specified income. And if it is specified income, 30% tax plus any other tax on the normal income. That is to be added. Now, penalty for passing on unreasonable benefit to trustees and specified persons. Earlier, there was no penal provision. Now, the penalty provision has been brought in from assessment year 23-24, where any unreasonable amount paid to the trustees and their relatives or person covered the specified person, they are liable to pay penalty. Consistency in both 1023C and inserted 21st penalty provided that where the trust or institution has applied directly or indirectly income or any part of the income for the benefit of that, we have seen that. Moreover, 13(2)(4)(6) benefit to interested person, then in that case, section 271(a)(e) will apply. It has been inserted with effect from AY 23-24. Existing provision, there was no penalty at all. Now it says the violation, if it is occurred, then in the first time during any previous year. Violation for first time during any previous year. It is 100% of the amount. If it occurs subsequent year, then it is 200% of the. So the penalty is so dangerous. We have to be careful for giving any income passing from the trust to interested persons. Now, reasonable from our angle, reasonable from their angle will be litigation. If it is free, then there is no problem. And we have to certify that. That's another hierarchy. Not only the trust has to maintain the record. So why it is reasonable? This penalty is leviable in addition to penalty leviable under any other provisions. So it is dangerous whenever you now, if there is a college, trustee is a lecturer or professor, if he has been paid for is giving the lectures in the college, and it is equal to what other professors are being paid, it's reasonable. But there is one more provision in education institutions and hospitals. If author, trustees, or their relatives are being given some free treatment or concessional treatment, that will be, the difference will be treated as the income of the trust. One more thing, there is ambiguity to some extent. Now the reasonable rent is say 30,000. And trust is paid to that trustee 60,000. Whether the violation is 30,000, 60 minus 30 or 60,000. Provision says amount paid. If it is unreasonable, there is a violation. So penalty will be levied on 60,000. It is unreasonable. Not the part of unreasonable amount. The wordings are such, you can argue in tribunal or high court, that's a different issue. But the wording says the amount paid for unreasonable will be liable for penalty. So, but there is some ambiguity on that. That time will tell. Now, treatment of donation received for renovation and repairs of the temple. This, I think, provision has been brought looking at the Ram Mandir temple, where the whole world is donating to them, and they are unable to know the who has sent, how much, and from where it has come. There are so many practical problems. So they have allowed them to treat any donation as a corpus donation. And that corpus donation, if you have received, then the provisions of that corpus donation amendments have come now that we'll see later. If they violate in that, that will be treated as the income of the trust in that year. So it is for the purpose of some trusts where the temple is under construction. We can think which temple is under big construction. Anyway, but the law says Gurudwara, church, or mosque, or any temple. And the word used, or which has been notified in ATG 2B. ATG 2B is a section where certain trust or certain temples, and these are notified for the purpose of, it is B, for the purpose of 100% deduction, and those notified temples are there, which is national importance, those are given. But I think there is a drafting error, I believe. The word is used or, means temple, mosque, church, or Gurudwara, or notified. I think the intention was to give it to the notified temples only, or notified mosque, notified church, or notified Gurudwara. But the word is used or, it means general also covered and specified also covered. So when specified are falling in general, what was the need of putting or specified? So it indicates the intention was there to just cover the specified or notified such temple, Gurudwara, or church, or mosque. But our word is used, so till it is amended, there is benefit to the other people also. There was no clear provision of the treatment of such donation, and there is a default. There are certain conditions, and default is to be taken. Now I'll take you to the maintenance of books of accounts. There is an amendment by with Finance Act 22, which were from 1/4/23. The provision said the trust has to maintain books of accounts as prescribed. And that amendment was brought in for assessment year, financial year 20, assessment year 23/24, that is financial year 22/23. But the CBDT has notified those books of accounts and other documents on 10th of August. So the provision applies as prescribed from 1st April. It is notified on 10th of August. Now question arises, the trust has to maintain from 1/4/22 or from 10th of August. Practically 10th of August because we have notified. We were not knowing on 1st April what was the prescribed. Practical advice as far as possible. As such, you are required to maintain those documents for the purpose of audit. And we know it very well what documents is required for the purpose of audit. So you try to make it it's a matter of just 5 months. April, May, June, July, August, 10th of August. Ask accountant to write the account in that manner for even 5 months also, to the extent best possible. Because the first year it's arguable, but from next year, means 1/4/23 onward, you have to maintain. And I advise that all the accounts should be written in any system, either Tally or any other. Because you have to keep those books of accounts with full narration for income, for expenses, for amounts applied for the charitable. Name of the person, to whom it is paid, for what purpose it is paid, how it is paid, bill number, voucher number, all narration should be there for each entry. Even such strict books of accounts maintenance, I have not seen even for public company also. Audit standards separate, those things are separate. But so far as the income tax is concerned, you have to have, they have maintained for each and every type of income, you have to pay what you are required to maintain. So the first is, it is applicable from 10th August or 1st of April. So I advise, I have mentioned here, that as far as possible, try to maintain that and see that those accounts are closed every year after the audit is complete. And it is to be saved either in the printout, any electronic mode, any digital mode, you can preserve it. And you have to preserve those accounts for 10 years. Because now the reopening has gone to 10 years. So 10 years you have to maintain the accounts. Now it is noted, one more thing, these provisions are applicable to the trust whose gross receipts are more than 2.5 lakhs. So these maintenance of books of accounts are not applicable because audit is not applicable to them. So it is not applicable to the trust having income, means gross receipt income, section 224. He says gross income is the income of the trust. Even the voluntary contribution is also income. So if it is more than 2.5 lakhs, then only these provisions will apply. Second is I have covered, and I advise to the extent it is possible. Now, basics are cash book, ledger, and copies and bills are to be maintained. Then business undertaking, the separate books of accounts are to be maintained. And it should be incidental, that is the different provision. But so far as maintaining a books of accounts, separate books of accounts are to be maintained. Records of all the projects you have to keep. Record of income, voluntary contribution, income from property, other income, those records have to be there. See, I have given in the brief headings. There are details for every point in the notification. Okay, income applied, for what purpose, to whom it is paid, what is the object for which it is spent. Those details are required to be maintained. Corpus donation, to whom it is given, whether it is corpus donation, because there are so many amendments for corpus donation in 23. So it has become, they want those details are to be kept for separate for corpus donation and non-corpus donations. Then what record is to be kept are to be given. Then details of amount received for repairs and renovation, those trusts which are, they can opt for corpus. Then details of loans and borrowings, their terms and conditions, all documents should be there. Their details are to be mentioned in the accounts. And we are going to certify that proper books of accounts are maintained. So our duty is to say whether such things are there or not. I think 10B he will cover. We have to be, because that 10B, the audit report, there are two parts. True and correct figure in the annexure and true and fair view in the balance sheet and profit and loss account. There you have to give comment. So wherever possible, wherever you feel that these are not correct, you qualify them. If you want, because now chartered accountants are going to face many problems. If we are allowing such things. From here, I can tell you the time is going to come, we are going to face the problems. And they have started moving in that direction. We all are covered in PMLA. Then, straight, under no bail. Certainly, we are our membership at risk, our standing at risk. So, things are there. Even the courts have also taken what auditors are doing. So we have to be very careful, because audit report, my only suggestion is you will cover in detail. But my advice is that wherever you find, you just give qualification. On this basis, it is not possible to, it is not practical. Oh, do you remember 44AB account to pay checks? One standard note we are giving still continue. So that type of prepare some standard notes, and you have to give that and give your report. Then details of 11.5 investment, किधर डाला, कहाँ रखा, कैसा रखा, उसका क्या है, what is the rate of interest, क्या है, वो सब लिखने का, whether it is continue, that is. So these are the, and then very important is, you have to keep the details of immovable property and movable property. Now in immovable property, name and address of the property. Nature and address of the property, cost of acquisition of the asset. So now every trust has to keep record what is the cost of that asset. So recent new trust we can arrive. 10-15 saal, 20 saal ka hoga to we can find out the cost. But old 50 years, 100 years old trust, how can you find out the cost? So there are practical difficulties, and the same way they want it for nature and cost of movable property as well. So record of specified persons. Every trust should maintain who are the persons covered in 13.3 specified persons. Now author. Author means the first trustees. Or settler also is author. Then all trustees presently, their relative definition, we know it. What is relative definition given in income tax? Same definition is taken here. The concern in which they are partner, they are directors. Investment, if they are doing more than 20% interest in those concern. So those things are covered. And one more nasty provision. Any person who has donated more than, aggregate more than 50,000 in any previous year or life of the trust. Now 50 years old trust is there. I have many clients who have 50 years, 60 years, 30 years, 40 years. Their formation is old. You have to keep the record of those persons with name, address, and PAN number. PAN, it is available, I think. PAN and Aadhaar, it is available. But so far as the maintenance of record is concerned, you are supposed to keep those records. Now, there are practical, even at year 7, you have to file that. At 7 also asks those details of persons covered in the space. How can you write if there are 10 people and only 50,000 rupees? And that too in aggregate. Kabhi 10 diya, kabhi 15 diya, kabhi 25 diya, 3 saal mein to he is covered. How can you maintain that record? I think this is not practical. We have asked time and again either to delete this or increase the limit, but they are not listening. Or they are not bothered. Last may any other document which you feel it is to be maintained. इतना डिटेल आने के बाद सर द बुक्स ऑफ अकाउंट्स एंड डॉक्यूमेंट्स टू बी केप्ट इन रिटर्न इन द इलेक्ट्रॉनिक मोड अपन कैसा भी लिख सकते हैं रख सकते हैं द बुक्स ऑफ अकाउंट्स एंड अदर डॉक्यूमेंट्स शैल बी केप्ट एंड मेंटेन एट इट्स रजिस्टर्ड ऑफिस दैट इज द बेसिक रिक्वायरमेंट बट proviso is there provided the books of accounts and other documents may be kept at such other place in India as the management decide by way of resolution and the said resolution to be intimated to AO within 7 days from their passing off. So if you are going to maintain your books of accounts other than registered address, you have to pass a resolution and copy of that resolution is to be submitted to the jurisdictional assessing officer within 7 days. Now, if you do not follow that, what are the repercussions? Already before this amendment came, a notification came, there are so many places accounts are being kept. There are so many trusts have got so many branches and maintaining those branches are there. So there is a practical problem for this. My suggestion for this situation is pass the resolution in current date that accounts, main accounts, whatever is maintained at registered office and record will continue to maintain at this place. This is my idea. I have suggested. I may be, or people may accept or not accept, it is up to them. But there is a solution. I believe that. That it will continue to maintain. Because you, when your notification came, it was there already at different places. But sometimes registered address is the trustee's residence and the office is different. So you can mention it will continue to maintain at this place and submit the resolution within 7 days from passing of that to the assessing officer. Because in Form 10B and 10BB audit report, you have to write the date on which a resolution is passed, the date on which you have submitted with the assessing officer. See to what extent the coverage is there and why charitable trust provisions are become hot topic during this period. And frankly tell you, we are also, whenever we read, we found something, oh, yes, abhi ho sakta hai. Day in, day out, practicing in the trust provisions. I can understand those who are not having that full practice on charitable trust, how they will cope up with these requirements. But I'm sure what I said in earlier, and still I am that, chartered accountants are capable. It's only a matter of time. We will understand what is there and we'll follow that. We are there to guide you. Any problem you face, you can ask us. We are available. Second thing, department, personnel, commissioner, they are interested in solving these practical problems. It is not that they want to just rule it. So that, to that extent, there is a, softness is there in the exemption order. So these are the provisions hurt us. 7 days assessing officer ko, the reason is PFI ka jo search hua tha rato raat. And they wanted to start at midnight and end before 6 o'clock. And so many places they didn't find the books of accounts. So on one trust, if you have suffered that, you are bringing that for all the trust. And within 7 days, किसी को ये है कि नहीं, तुम क्या करेगा वो रिकॉर्ड को? 9 and 10 2 महीना पहले फाइल करने का अगस्त में. I asked the commissioner, what you will do with this 9 and 10 if it comes to you in the month of August? Commissioner said, no, I can't do anything unless the return is filed and income is being done. Because you understand that, then what should be the provision? It should be along with the return. In fact, for the trust, all the audit reports, forms, accumulation, ITR should be on by the due date. unnecessary keeping it with 44 AB business provisions. किसका दिमाग मालूम नहीं क्या? My, I feel from my heart that these are all not correct. And books of accounts are to be kept for 10 years. And in case if case is reopened, for that year you have to maintain for more than 10 years till that reopening case has been finalized. Other amendment 115 TD we have covered, and certain provisions they have removed. I'm not going in detail. Now 23 inter-charity trust donations. This is very, yes please.
School.
I have explained you.
We have to give a letter to the jurisdictional officer. Jurisdictional officer means where the.
Where your trust register pen number se मालूम पड़ेगा ना यार. You just find out the status from the pen. You will get the who is jurisdictional officer. Because now we have got to go to income tax because of there are no faceless assessments are there. So that's why we don't bother about jurisdictional AO. Jurisdictional AO means where your trust is jurisdictionally assessed. You will find from status of the pen number assessing officer. But there is one more issue which is going to come up and I am advocating. You see so many trusts are having pen number of different. Some are FOP, some firm, some other name. And they are granting registration on that pen number. So when you check that jurisdictional, will go to Ward 27 or Ward something, something. There is a jurisdictional problem which is to be solved. You have to see that is with the exemption ward, if the tolle registration is there. But then it is to be migrated to the exemption ward. That exercise is to be taken. So for that, I have suggested you pass a resolution, and in that resolution, for the main school, it is maintained at this address, registered address. Registered address means what? The address which is registered with Income Tax Department. There should not be different address which is registered with section ROC or Maharashtra Police Trust, Charity Commission office. So that address plus you will continue to maintain following addresses for our Pune branch, for our Kolhapur branch, for our Nasik branch, or for our Rajkot branch, any places, and you submit that. So at least we have complied. They have come to know what are the other places. If they want to search, they have ready. So in case, that is the only reason I think. In case there is a change further, you have to pass a resolution and again submit within 7 days. Inter-charity donation. Inter-charity donation is permitted. Yes, this is the background. Earlier it was permitted, 100% deduction. You donate to any trust, but only the care is to be taken that the objects are the same objects. And it is given as you can give as a corpus. They can have their income, general donation. Those were all permitted. So these are the existing provisions I have mentioned for your that, because inter-trust donation has become a big issue nowadays. Even FCRA, it is not permitted. They have not only donation, they have got the use transfer. You cannot transfer to any other trust. Reimbursement also you can't do. Inter-charity trust, even if the receiving trust is spent or not, donor will get their deduction. It was the provision and there were many judgments. Now with this Finance Act 23, they have brought an amendment that if one trust donates to another trust which is registered under either having approval 1023C or registered under Section 12AB, if it is donated, that the donor will get only 85% as application of it. 24, current year. It is not retrospective, correct. So 85% of the amount donated Eh? That is 9. Assessment year 24-25. So 1/4. Correct. 23-24. To that extent, I corrected myself. Right? 24 to 24 current आएगा. Now, the problem is there is unintended problem has arisen. Where you have spent 100%, you are allowed only 85%. Now the question, what about those 15%? Don't confuse with 50% accumulation, because it's a percentage as confusing. That 20% in to 15 and all those, and here 15% for all purposes. So that remaining 50% has the issue, and which issue I have tried to explain in one example. This is my working, my personal opinion, my personal view. The case is, if the trust is having 1 crore income, if it donates 100% to another trust, like in old provision. In old provision, suppose I have a 1 crore income, I have donated 50 lakhs to another trust and spent 50 lakhs for my expenses and object of the trust. These are all hypothetical example, but there is a thought process. So in that old provision, 50 lakhs were allowed as a deduction. Amount applied 50 lakhs is allowed as a deduction, income nil. That's very clear. The new provision, 1 crore is an income. I have donated 100% 1 crore, and that is allowed in the law. It is not there, I have to spend, I have donated to another for education purpose. Because there are many, particularly churches or Christian trusts, or even mosques also, and Jain trust also. They receive donations and they distribute to other trusts. Their followers, other trusts or other than. So they are facing problem. There is a problem for them because 85%, or the reason is what? One case. In one case, that business entity or that industrial entity was having many trusts. So trust A was donating to trust B 1 crore, B was donating to C crore, C was donating to D crore, and every donation they were claiming 15% accumulation without any investment, without any that. So government came to know they are misusing this provision. Now what to do? They have disallowed 15% without. And one more thing, which I am coming out that all these amendments, they are not consulting institute or they are not involving professionals. If they involve in this process professionals or institute even, so these nasty provisions will not come. I have given in writing my magazine on this point. Now next is, suppose they donate 1 crore. So I will be allowed 85 lakhs as an application of income. Now what is my position is, my 15% will be nil. Automatic 15% we get. 11(1) says 85% is to be spent because I don't have money. Whole 1 crore I have, whole 1 crore I have donated. So I will not get that 15%. I will not get even accumulation, 9 or 10, because I don't have money to accumulate. So I have to pay the tax on 15 lakhs. Now here comes another problem. Whether these 15 lakhs will you tax as a 30% or normal rate. Because if it is specified income, then straight 30%. So was this an intention of the government? I think this provision is to be reconsidered. Now, third example. In third example, my 1 crore is my income. I have donated 50 lakhs and 50 lakhs I have spent. So in that case, I will get 85% of that first 50 lakh donation. That comes to 42.5 plus 50 lakh. That comes to 92.5 lakhs. Again, it remains 75 lakhs. But I have spent all 1 crore. 50 donated, 40 spent. So this 7.50 also will attract the taxes. But now the third case. Third new case. 1 crore income. 50 lakhs I have donated. Then 25 lakhs I have spent. So I have my out spending is 75 lakhs. Now the position you see, my total application 42.5 plus 25, that comes to 67.5, the third column, 67.5. My, I will get on 1 crore. That automatic accumulation of 15% of 15 lakhs. So 62.5 plus 15 lakhs and my total accumulation, I can do 17.5%, either 9A or 10. Specific accumulation or normal accumulation, because I am having the funds with me, that is 25 lakhs. So in case where there is a money left with the trust, the calculation according to me comes that there will not be any tax liability, though you have donated 50 lakhs. But that 15% का जो issue है, it will be, time will tell how it settles. Or I foresee amendment on this. Because I have been asked what should be the alternate. Like one big concern person was in the department. Because you have written that some other that article is to him. Other systems should have been adopted. I am not suggested in that article. So what do you mean by? I said, first donor you don't disallow. The subsequent donor you disallow that 15%. Because he has received the donation, usko 85% का जाता है, तो उसको तो income में आना है. So that can be solved to some extent. Another is the subsequent. I mean, the trust which is receiving the donation from another trust, don't allow that automatic 15% accumulation. That's the better suggestion. And I think government might come out with some correction in this provision. The application of income. Now, I think we have...
if the property is donated by one person, very similar object.
Are you claiming application of income? Matter is over. It is where you claim application of income. Sum of money. Earlier, the situation was there. The trust A is donating to trust B. So trust A was getting application of income, and trust B, if corporate donation given, the trust B was claiming 11(1)(d). Nowhere time. So to curb that, that is brought. And the second trust or subsequent trust, we are getting that 15% benefit. That also they wanted to cover, but it is wrong way. Now we expect. Now there is a corpus donations. CTC. Yeah.
Where he says that 11(1).
That is which magazine? BCS is na. They are saying that in my argument for that purpose also, I discussed with Anil Sate. I think he's a correct na? So Anil Sate's view is that it will be taxable. Correct.
Even though it is donated, it's entirely.
So his example, I'll give you his one presentation where this 1 crore example he gave, and he said 15% will be taxable. Now I tell you, thereafter I argued with him. I said, deeming fiction is created by the act. That I have donated 100 rupees and I have been allowed only 85 rupees. Means it's a deeming fiction. Means deemed application you have given. And what is 11(1)(a) and what is 11(2)? That is also deeming provision. Means you have accumulated, but deeming application is there. So if my principal is deemed fiction created by the law, as a deeming provision, I should be allowed as a 15%. So he replied in writing, I have a message. He said, then how you will satisfy the investment or setup? I said, normal 15% doesn't put any condition. There is no any condition. So that is possible. Only in one case where this first three cases, where you say, it is my deeming fiction is created. So I have applied means I have spent 85 rupees. Like that, my deeming accumulation should also be there because there is no condition for investment. There is no condition for submitting any form. There is no condition for maintaining 11.5. So in that case, I should be allowed that 15%. It's automatic. To the extent 15%. 11(1). So now I have not read this article, but now he says it is allowed. I have my own doubt. My calculation, all these 4 examples will say if you have no money, the question will arise of taxation of that money. That is unintended result. It was not intended. Because in the memorandum explaining the provision, they have written that multiple log benefit le rahe hain, that's why we are stopping it. So they don't, the intention was not there to tax it, but automatic is because the words used in 11(1)(a) is also accumulated or settable. So the same argument even also I will ask him also, what is the meaning of or? Accumulation or set apart. It means both are separate. This or that. So if you cannot set apart, you can accumulate. And nahi hai. So that law says accumulation or set apart. Set apart means keeping the money separately. आपने उसको अलग से रखा. 11(2) में है वो दो. There are judgments also set apart. So here accumulation may fall under 11(1). Gautam Nayak is also one of the Anil is different view. So I'll discuss with Gautam also now. Because we are in regular touch with these such provisions. It should be allowed. There is no intention. But we foresee the problem. Okay, it is not set up. All deeming provision. Now, corpus donation, if you have given to any another trust, 11(1)(d) will not be allowed. Any corpus donation because now 11(1)(d) is investment in 11(5), then only you will get. But I can stop just now. We can come again. हाँ, ठीक है. ये पूरा करके then we will stop. Because I said in the beginning I was slow. Because I want to explain in depth. So corpus donations and amount spent on out of the borrowings. Now it will not be allowed as an application of income the year in which you have received corpus donations or the year in which you have received loans and borrowings. But 11(1)(d) also you will not get because 11(1)(d) there is an amendment that 11(d) will be allowed if the amount is invested in 11(5) mode. So if you have received the corpus and you have applied that corpus other than 11(5) mode, you will not get neither 11D nor application. But that application will be allowed to you in the year in which out of that year's income you have again deposited back into the 11.5 notes. This was a provision from 22-23 budget. They have further amended that redeposit and loans and borrowing. Loans and borrowing also, the year in which you utilize that money will not be allowed as application of income. It will be allowed the year in which you repay the loan to the extent you repay the loan. But there also to the extent you reinvest. Very little complicated. And trust has to keep the record. What was the amount of corpus you have utilized? Loans and borrowing is very clear. You repay, it clearly shows the repayment of principal. It will be allowed the year in which repayment is done. Now they have brought one more condition in that it is to be set off within 5 years. So the corpus donation, if you have received, if you have applied for the objects of the trust, it will not be allowed to you as application of income in that year. It will be allowed in the year in which you are reinvesting the same, and maximum 5 years. Within 5 years, you have to recoup it. Otherwise, that is gone. But same thing is they have applied for loans and borrowing, which I say it is not fair for loans and borrowings, because loans and borrowing, if any trust is taking for any project or for any purpose, then generally the loans are 7 years, 10 years, 15 years, 20 years repayment. There is interest benefit. There is less EMI to be paid. The trust can manage their affairs even with the repayment. Now you say only 5 years it will be allowed. So there is, to that extent, along is there. That is unfair. So far as at least corpus, okay, we understand. Okay, next 5 years you recoup, you don't recoup, then it is okay. Hisab, calculation we have to keep for 5 years. But loans and borrowing is not fair. To be named, it is up to you to spend or not. But spending of corporate donation should be mentioned in your trust deed. It should be allowed to be spent. Charity Commission allows you. There is no restriction in ROC. You can spend corpus. It should not be zero, at least that's it. But corpus donation can be spent for the object of the trust, should be there. Authorization should be there in trust deed. That care is to be taken. That is the purpose of corpus donation. Corpus is what? Capital. Once you have received the capital or corpus, they want it is to be invested in 11.5 and the interest income is to be utilized. There are certain directions that interest is also to be treated as a corpus. Then what is the meaning of that donation to the trust? खाली देखने का हमको 1 करोड़ रुपए आया और वो 1.25 करोड़ हो गया, 1.5 करोड़ हो गया, 2 करोड़ हो गया, लेकिन what is the use of that money if I am not able to utilize for the objects of my trust? The very purpose of the corpus donation is that it is to be used for the income is to be used for the objects of the trust or a specific purpose. Somebody can donate for education, somebody can say for prize distribution, somebody can say for cancer treatment. The interest income of this money is to be used for cancer patient treatment. So trust has to follow that direction. Yeah, other conditions, okay. My main is that amendments of due dates. Now I have said 9A and 10 are to be filed before 2 months, but this circular of 24th has now it is cleared. The exemption application will not be denied if it is filed up to due date of filing of return. I think you all must have got that details of circular. Then the due date for claiming exemption. Now it can be filed up to belated. We have covered earlier. 139(4) is also covered now. The updated returns, there is amendment that updated returns, what happened earlier, people have paid 2 years taxes and filed the return and automatically they got the exemption. So they have now amended that it is to be filed within the time permitted, then only the updated return will allow the exemption for trust only. Others, you can pay the tax and go ahead with it. There was a provision 12(a)(2), which said any trust got registration. So any matter or assessment is pending before the assessing officer on the day of registration, they will entitle for the exemption of claiming of exemption under section 11. So that was brought into to bring the old trust into the income tax net. Now they have realized a long time is passed. Now those provisions they have deleted from 1423. Now, specified violation we have seen in detail earlier, because I'm going a little fast now. We have to, trust or institution can apply directly for final registration. Now, earlier there were the time limit. Provisional registration, if you have got within 6 months of the commencement of activity or prior to 6 months or over of the period. Now they have brought an amendment. If the activity is already started or old trust, they can directly apply for normal registration after 110. So 110 is there, so this circular has extended the dates up to 30th September, wherever the dates are missed. Now, for brief, I will cover that circular. Development authorities, they have brought into for the judgment, whoever authorities were exempted, they brought into the act. Just to say that they are following the judgment. The accredited income, I have said we have covered because of these 3 conditions are also covered. Removal of certain funds from ATG, it's a political decision. Rajiv Gandhi and Indira Gandhi and Jawaharlal Nehru Memorial Fund, they have removed from ATG provisions. Earlier the news was they have been removed from the exemption, but it is not so. It is just they have removed from 100% deduction. So they automatically fall in 50%. So 50% deduction, even in those cases, will be allowed, but it's a political decision. Now, this CBDT circular, the 10B and BB is going to cover, so I am not going into that details. This circular has been issued, circular number 6 on 24th of May. I think everybody knows about that circular, and the summary is, I think I have prepared that and I think circulated to all the members by the convener. But here for registration, I have just given the details. Application in Form 10A for registration or approval, or Form 10AB for approval 1023C on registration, now extended up to 30th September. Whoever missed the bus, earlier provision, then extended in November, now they are allowed, they can submit 10A and get the registration. Now there are issues certain because 2 years are passed nearly. So if you get that exemption from assessment year 22-23, then filing of 10BD form question will arise. And provisional registration, if application is pending, but that circular said you can withdraw that. Means all pending application under 10AB, those people who have submitted not in time, say within 6 months from the commencement of activities, they have submitted late. So they have given the time up to 30th September. It is to be treated as a file in time and give the order on the basis of merits. Then application on 10AB, which was solely cancelled or rejected on the ground of that it is not filed in time. So in those cases also up to 30th September, the SSC trust has to resubmit Form 10AB. It is not, they will not call their own because they say they are in system, they are not having that. Even circular also says they have to resubmit. Accordingly, if registration and approval is granted, the provisions of 115 TD3 in these cases will not be applied. Now 10BD is a return which every trust has to file by the 31st of May for the donations received where 80G is applicable. Now in this case, situation is that if I get the registration now from assessment year 22-23, what will be my 10BD for 22-23 and 23 current year 23? So there is an anomaly because 10A you have given the time up to 30th September. 10BD is extended only for 1 month, that is from May to 30th June. So the problem will face by some trust who are applying thereafter, then how they will follow these provisions of 10BD of filing that return, because there is a penalty, not filing as well as delay in filing. So that is there, but there is no solution as of now. We'll have to see that in such cases, I think penalty will, they have to drop the penalty. What the hell? But position is this, there is a problem. 9 and 10 is up to due date of filing of return. It has been audit report 10B and 10. There was a details to be filled up for payments received from electronic modes and non-electronic modes. That's the biggest problem we'll face by all the auditors of that trust provisions. Because how can you find out each and every payments which are electronic mode, and they have to give you the details. And account pay check was missing. Anywhere it was not covered. So they realized that, and they have come out with in the circular, they have added that account pay check also will be considered as a electronic mode. So you have to add with the electronic mode, and others is non-electronic mode. So now non-electronic mode is remained for not account pay check, means cross bearer or bearer check or cash. So those details you have to give separately in the audit report. That's it. I think a little late, though we have started late as well. But now judgments, I think I have covered to some extent, which was possible. Otherwise, what I wanted to cover basics. Basic means these amendments and these general provisions is covered. Thank you very much, friends. Any questions? जजमेंट्स कितना लंबा है देखिए, लिख लीजिए। हाँ जी बोलिए। I believe in sharing. Well, registration.
Up to 26, 27.
Correct.
For that, this 12 we
Listen.
permanent.
Listen. It's a new trust or old trust?
Old trust.
Old trust means activities are continued.
Long term.
So within 6 months from provisional registration, you should have filed the normal 10. So you have missed that time.
No, I have
10SC is a provisional registration. 10SC is for normal registration and provisional registration, and even 10SC is for 80G also.
asked.
The provision is that 6 months prior to the expiry of the period or within 6 months from the commencement of activity. So your commencement of activity is gone.
Yeah.
6 months. Now this circular is in your benefit. You immediately apply 10AB. Let that system open. They will take a week time to CPC to open that. Because yesterday only I discussed with IT, okay, bhai, now because every time 2-4 din lagega. You can apply and you will get it.
Thank you.
Yes, 10, because this is extended up to 30th September.
Okay.
Any person has missed those applications, now submit. You will get it.
But sir, here they say provision up to 20.
But when you have to apply for regular, if do not commence the activity, then you have given 3 years. That is too long. In fact, it should have been given for 1 or 2 years.
So I should apply for 10.
you apply, you will get it. But let that system set open is accepted. So yeah, thank you very much. Thanks a lot. Are both bye. No. You mark up, you read Ahmedabad Urban Development Supreme Court judgment. The final crux is that if the sale or if the receipt is as per cost or little markup, reasonable markup. So if cost is say 100 rupees and you are selling or that adding that 10 rupees, then till that, then 215 will not apply. That profit is from fees, educational activity. So if you have 11, there is not a problem. 10, 23, 6, totally problem. It will, unless there is 100% educational activity, then only it will be allowed. Otherwise not. But I advise, even 11 also see that your profit is not much. You will face the problem. That is the purpose 11 too, accumulation. You are doing accumulation, then that is the purpose of 11 too.
So for corpus,
Yeah,
that is for specific purpose.
Corpus,
Corpus donation for specific purpose.
okay.
Say for building. So
Building is another separate. Other than building is also some provision is separate.
so what is the time limit for that? Is there a time limit on that spending? No time limit.
No time limit. But practically, you should invest during the year. If you have not invested, you will file the return. You will not get 11 one day.
If you invest, then you have to spend it within 5 years.
See, if it is for building you have taken and you have invested. Either you directly spend for a building that 11.5 is covered. Even otherwise you are not spending, it is in the bank. Bank balance is also considered as an investment under 11.5. But the provision says you have to specifically maintain for that purpose. When you have separately show it, and one idea I gave, you will agree that in the bank balance also you show this is for corpus balance and this is non-corpus balance.
Okay.
Because you have to specifically show that corpus is in 11.5 mode.
But then there is no time limit as such for certificate.
Yes, there is no, up till now there is no time limit, but I say before the year end you have to do it. Because you will finalize the account, you will file the return, the question will arise.
No, before the year end, you keep the money aside.
Corpus, no.
Yeah.
Corpus, it is, in fact, they want that corpus is not to be spent at 100%. You should keep it in investments and income is to be utilized. That's the ideal situation.
Okay.
Okay.
One more thing, sir, this 1080 just said that it can be refiled, but there are some procedural issues. I think the system is not taking.
No, I said no, it will take another week or so.
Okay.
Yeah, both. All are extended. So it's a very good circular. Okay, thank you very much.
Thank you, sir, for taking this session today. First of all, thank you for accepting our invitation. And on behalf of the full JP Nagar Study Circle, I would like to propose a hearty vote of thanks for coming here and presenting your views, for explaining to us the very tedious amendments that have been brought into the charitable trust taxation. So thank you so much for your detailed presentation also, which the members are wanting. I'll share it with them by Monday, I think. I would also like to thank our coordinators today who took out time and helped in the coordination of the event. Last but not the least, all the members, thank you so much for coming and attending, being a patient audience for participating and making it interactive. And now, before I close, I would just want to say charitable trust amendments, I think there is a lot more to be covered. So we are planning one more session on probably next Sunday. The details are yet to be finalized. I'll let you all know. More specifically on the audit report, the Form 10B, and also if something remains out of this basic amendments, we'll be covering then. And another session we have not yet planned. I'll let you know by Monday or Tuesday, whichever topic we finalize. So that will be all. Thank you. Thank you so much.